Greetings and happy Tuesday to you. On our last podcast, we introduced the 7 money milestones, which are the key steps that will help you achieve financial security, become financially independent, and pursue wealth by overcoming debt, protecting and prioritizing income, developing savings, growing cash, and guarding your financial legacy. Today, we will discuss the second of these 7 money milestones, which is proper protection of your income and assets. This particular step covers a lot of information, so we're going to break this session up into 2 parts to make it a little easier to understand and so that it's not so complicated. So if you're ready, let's talk Tuesday. A famous writer and revolutionary once wrote, "Protection of a man's person is more sacred than the protection of property." Now, certainly self-preservation is paramount, but here's the thing. You might not be able to fully protect yourself from illness or accidents, but you can protect your income and your wealth. Ironically, protection of your financial assets is called life insurance. It's a defensive strategy motivated by a sense of love, responsibility, or both. So along with obtaining a financial education, as we discussed last week, proper protection of your income should be the first milestone that you complete. Why, you may ask? Because without your ability to provide for your family or your business, the stability that they enjoy today could become a hardship for them tomorrow. So to secure proper protection for all those who depend on you, sit down with a financial professional to have a conversation about life insurance as soon as possible. And if you already have life insurance, let me ask you this question. When was the last time you had a review? That's very important. Now, if you don't have a financial professional who can help you navigate your journey toward financial security, I can refer you to one of our How Money Work experts, free of charge. Just get in contact with me and hit me back on one of our social mediums. So here we are. Let's talk about life insurance. It is important to familiarize yourself with the terminology of a life insurance contract. So let's talk a little bit about it. First, you have the owner. The owner is the person who controls the rights to the policy and pays the premium. Next, you have the insured. The insured is the person whose life is covered by the life insurance policy. Next, you have the insurer. That is the life insurance company that pays the death benefit if the insured dies. Next, you have the beneficiary. That is the person or persons who receives the death benefit when the insured dies. Next, you have the premium, which is the payments made by the owner to the insurer or the life insurance company. And finally, you have the death benefit, which is the money paid to the beneficiary. Most people ask me, how much life insurance do I need to protect my family? Using the rule of thumb that you need 10 times your annual salary or family income, an individual who earns $50,000 per year should have at least a $500,000 life insurance policy. Likewise, if you earn $100,000 per year, you should have a $1 million life insurance policy. Now, you and your financial professional will calculate your needs together since everyone's situation is different. The factors, though, that you must consider will include your age, your health, whatever debt you may have, the number of dependents, your annual income, and the role that you play in a business if you own a business. You and your financial professional should discuss questions like these. What are your short-term and long-term debts, loans, and goals? How much is your mortgage and or rent payments? How old are your children? And how much will their education cost? And do you have any assets that help cover funeral costs like an emergency fund? Now, all life insurance falls into two categories: permanent, or what some people call whole life insurance, or temporary, or what some refer to as term insurance. Let's discuss temporary or term insurance first. Temporary life insurance provides protection for specific periods of time, like 10, 20, or 30 years. You have the insurance coverage for a term, which is why it is known as term life insurance. It is the most affordable or cheapest insurance available because it provides only one core feature, a death benefit, and because it expires after the term. The term life insurance is possible to secure, with term life insurance, it's possible to secure a substantial amount of financial protection for you and your family or business with a relatively small monthly payment. This can make it easier for those who have limited budgets during times of high financial responsibility, like raising children, if you have a mortgage, if you have to pay for college, or if you have your own company. That all being said, there is no replacing you. But term life insurance can help your family replace the income you provided, and your business partners replace the role you filled within the organization. Term life insurance is an inexpensive solution that safeguards families and businesses from financial ruin for a set period of time. Now, what follows is important. Term insurance is a foundational tool to secure proper protection for your family or business. But what happens when the term ends? There are two scenarios for you to consider. Scenario one, you no longer need term insurance. That's cool. If your children are grown and independent, and their education and their home is paid off, and your financial responsibilities may have decreased to a point where you may not need insurance anymore, so you could just let that term insurance end. Scenario two, though, you still need term life insurance. And after your first term, you still may have a mortgage, you still may be a single couple or a couple that has a single income. You may have grown children and grandchildren who you still support, or a business that you still are involved in and need to continue to run that relies on you. And for these reasons or more, you may wish to purchase a new term policy. In that case, I would suggest that you renew or convert the policy that you currently have in place so that you don't have to go through the process of proving insurability, if that is an option in your insurance policy. That option is called guaranteed insurability. A new policy is going to cost you a little bit more because the older you are, the more expensive term life insurance will be. Now, there are a few visual illustrations of how term insurance work that I will share with you in a later podcast. But what I shared today is the basic premise of term life insurance. And as I mentioned earlier, we are breaking the proper protection segment, which is the second step of the 7 money milestones, into two parts. We just discussed term life insurance and how term life insurance can protect your family and your business. In our next podcast, we will discuss how permanent or whole life insurance provides a lifelong strategy that can protect your family today, secure your wealth in the future, and provide for your heirs after you are gone. Until then, have a good day, and let's talk.